Welcome to the Money and More podcast with me, your host. Over the next few episodes, we're going to be joining forces with XTB, who are on a mission to help investors create wealth for the future. We're going to be delving into three very specific topics, which I think are going to be very informative, very educational, very interesting to talk about, really. This is the second episode where we're going to be talking about the real possibility of a Trump presidency for the second time, starting in 2025. Thank you so much for coming back.
Oh, thanks for having me, Peter. It's great.
So what's your view on, Biden, Trump 2.0 coming later on this year in November?
Well, I'm no expert on US politics, but it is so surprising to me that you can't get candidates who are maybe not at way past retirement age, in my view. I'm not ageist, and I think if you're out for the job, fantastic, but there must be younger people, maybe with a little bit more energy, waiting in the wings. And it is beyond me why they're not up there as candidates, but they're not. So we've got to deal with the reality. As we've spoken about before, manage the things you can change, and I can't change any of that. So I think it's an interesting time for, obviously, geopolitically, of course it is. So that's, where politics gets really interesting. In terms of financial markets, it will really depend, because financial markets can do really interesting and unusual things with politics. We saw what it's done to the pound, what Brexit did to the pound, and we could even say Liz Truss. Yeah. Presidency did to UK assets generally. And how will it work? Well, actually, I think that, what the economy is doing is much more important to financial markets than politics generally. And as long as one of them doesn't do something crazy, and we're not expecting them to do something crazy straight away, then actually financial markets could kind of breeze through this. And the reason why I say it is because they've both been in power before. Mm-hmm. So yes, Trump is obviously a massive loose cannon. What will he be like 2.0? With Biden, it will be his final term. So there'll be a kind of a big, long goodbye, I see, in that case. And, what do financial markets love more? They love certainty. And do they feel a little bit more certain with these two candidates? Maybe, especially when the economy and the fundamentals of the US economy are so strong going into the election.
Interesting. So given Trump's approach to trade and taxation specifically, what do you think that might look like in terms of influencing the markets if he were to win?
Yeah, I mean, the situation could definitely be challenging for external markets, right? For those that like to export to the US. So a lot of people have been talking about the fact that US stocks and financial assets could be fine, absolutely do brilliantly. But in the Europe, the UK, parts of Asia, that's where you could really feel these, rumbles and the rumbling effect of whatever he decides to do. So he said that he'd ban all exports. I imagine that is not legal and not possible and will not happen. Yeah. But let's say he does put some restrictions on. The UK has a really strong exporting tradition to the US. In fact, for small and medium-sized businesses, it's the largest destination for UK exports. And, they have been, that we run a trade surplus with the US, believe it or not, since we're so in debt to our European neighbours. But we have a trade surplus. But what's been really interesting is that over the last couple of years, that trade surplus has narrowed from the billions to just about 30 million now. So it's really, really narrowed. So maybe it suggests that actually, even before Trump with Biden, that the US is getting a little bit more isolationist. We know all about American exceptionalism. We know that America is taking steps to bring a lot of things back onshore, to do things back at home, to create American jobs, keep the money in America. Then that's actually filtering through anyway. And maybe that would be a theme under Biden and Trump. And again, Trump will make all these big claims ahead of an election. Whether or not he does it all, who knows? Whether or not those things are legal and will be passed by Supreme Court justices, etc., who knows? And it could all turn the other way. But, in terms of the bigger picture, who are better for financial markets? Is it Democrats? Is it Republicans? Well, some empirical data since the 1990s say that during Democratic presidencies, stock markets perform better than Republican ones. But there have been a few kind
instances where that
of
hasn't been the case.
where that hasn't been the case, where Republicans might say, well, actually, that's a bit unfair because we had to deal with the financial crisis, et cetera, et cetera. So it's not an exact science who's better than but it tends to be that Democrats are. And that would have certainly played out under Biden, right? You know, he's got a very strong economic platform to campaign on for this election because record low unemployment, fantastic job growth, fantastically strong economic growth, some of the highest levels of economic growth in the OECD. And the S&P 500 has reached record highs, or globally, like US stock markets have reached record highs. And the US is now producing its own oil. So its oil is energy independent. And that's some pretty important and pretty fundamentally strong economic factors that he can really flag during his campaign.
Yeah. It's funny we talk about that because this is a conversation I had with a friend of mine yesterday, and he was talking about the fact that, you know, under a Trump presidency, the stock markets also went to all-time highs. And for me, it's kind of like, when you look at it from a political party point of view, everyone tries to obviously claim we did this, we did that, but it's like, how much of it is as a byproduct of previous administrations and what happens there? That's always going to be the ground upon which this political debate on economic performance is always going to be fought. But it's a fascinating one to see how it's argued out in the political sphere
because they
in
love
America.
to grab the glory for themselves. You know, politicians, they have to put themselves front and forward, right? And they really love to hang on to that. And you're right, how much of it is just momentum? Or just the fact that maybe people can't invest anywhere else. It's like a lack of opportunity elsewhere. And yet that will be front and center. There'll be placards with that on it and Biden rallies, I'm sure.
Yeah. So we know that Trump, his views, his foreign policy stance around countries like, you know, China and Russia specifically, he wants to be tough on those countries and assert dominance. How might those kind of foreign policies, if you were to introduce them specifically, impact international investments in emerging markets?
Well, I think it's really interesting that we're talking about this right now because the Treasury Secretary, Janet Yellen, has just finished a trip to China. And when she was in China, she did a couple of things. Firstly, she warned China she warned Chinese banks not to aid and abet Russia in terms of any kind of military aid, or I suppose financial aid that could be directed to the military. Otherwise, they will face sanctions from the US as well. And she really admonished Chinese officials for putting too much money in manufacturing, particularly when it comes to green energy, EVs, that kind of thing. So that's already kind of happening. We know that there's, you know, the trade war between US and China was huge when Trump was there, and it would swing from one thing to the other, and that mainly had a huge impact on Chinese markets. The Chinese economy this time around is in a more fragile position. It's got a problem with deflation, not inflation. Growth has been weaker than it traditionally has been, and there's been pockets of problems, for example, big problems in the property sector, example. So China maybe is more focused on those. Donald Trump will probably try and score some cheap wins by blaming everything on China. But you can't actually do that when the US economy is in a much stronger position and you're already seeing a lot of things brought back on shore. So actually, because the US economy is doing so well, he might be mindful to just be less critical of China. Now, when it comes to Russia, what I think could be interesting, especially if Trump comes in, is that he might go completely left field on this and try to reach out to Putin. We know that Republicans in Congress do not want to give money to Ukraine. Yeah. They want to stop that. So if he does that, if he maybe loosens sanctions on Russia, if he brings Russia maybe back into the fold, I don't know how that would play out. I'm not a foreign policy expert, but I think you'd look at that. What could that mean for Europe? What could that mean for the rest of the world in terms of energy policy? Mm-hmm. Could that mean that Russian supplies of oil and natural gas come back onto the market? Yeah. So could that lessen the inflation problem down the line, naturally be a good thing for some European and international countries in terms of pure economics? From a geopolitical perspective, that would be very, very strange. However, the one thing I thought when Yellen has been in China is you've basically got the US and China at totally opposite ends of the geopolitical fault lines. So you've got China allying with Russia because they are importing all the Russian oil that Europe has sanctioned out of it. And then you've got the US at the other end saying, no, Russia, beating Russia. Actually, Trump could make them meet in the middle. Now, this may sound like a strange thing to say, but dare I say it, could Trump make global geopolitical tensions, could he ease them a little bit in terms of Russia and the West?
Is it time that he potentially uses that art of the negotiation to bring it to the table? Has he got it in him? His business record will suggest that he probably has got that.
Yeah. Two strong men who really, but the trouble is they'll clash over something, won't they? Because one of them will want to be the big dog, and then that could, goodness knows where that could go. But at some point, does he bring Russia back into the fold a little bit more? And I think that's one of the maybe the parts of his potential presidency that we just don't know which way it could go. And that's why markets, I think, are willing to ignore it at the moment. They don't want to price anything in for Trump because you never know what he's going to do next.
Yeah. That's really interesting as a take there, because I think globally, when you look at what's going on at the moment and alliances that have been formed, Russia, China, I think from an American point of view, that alliance, they don't really like seeing that alliance in any way, shape or form. So they have to take a stance around that. And I don't know whether it would be an opportune time for someone like Trump to actually, I feel like he would be the only one who could potentially be like, listen, we need to get this stuff in order because of his strong personality per se. But it's definitely going to be interesting to see how that pans out if he does win in November.
Yeah, absolutely. And he's such a contrarian as well. I mean, you just wouldn't put it past him.
Yeah. So considering the potential continuance of a Trump deregulation, because that's something that he actually did to try and lubricate the economy in the US, what are the implications for kind of environmental, social, and governance investing? Because I think EV, for example, he thinks green, he thinks global warming is all a hoax, and ESG is very much predominant on, thinking about how do you better the world with those environmental factors involved. What do you think that might look like?
Yeah, I mean, he openly opposed ESG policies and investors having to put ESG policies within some of their investments in his last months of office back in 2020. So I would expect that to restart again. However, I think it's happening at a really interesting time, because what we've seen is ESG, the whole thought process around ESG has changed a bit since this inflationary spike, since we've seen global commodity prices rise. Because you've got to look at the S in ESG investing, the social. Is high levels of inflation, is that good for society? Is Russia being very aggressive literally on the doorstep of Western Europe? No. So does there need to be some, defense companies in your ESG portfolio? Does there need to be some oil companies in your ESG portfolio? We've also seen the likes of some of the big oil majors, BP, Shell, for example. They have massively rolled back on their ESG promises, their transitions to green energy, because of some activist investors have pushed them to do it. But they also see where their oil is still very much in demand. We're not quite at that green transition yet. So it comes at an interesting time. The other thing that I thought was interesting, Q4 earnings season that's just gone, we saw the lowest number of US companies citing ESG on their conference calls since Q2 in 2019. So that was during the Trump administration. 29 of the S&P 500 companies cited ESG in Q4 2023. That's below the 5-year average of 82, and even below the 10-year average of 43. So things have really changed since Russia invaded Ukraine anyway. And then you're bringing Trump on top of that. Now, he'll be doing that for a couple of things. It's to really give one to the Democrats as well, because of the huge amount of fiscal stimulus that Biden has given for the Inflation Reduction Act to try and move to this green future. And actually, he's relying on a lot of the oil-producing states and probably some of the oil producers to back up his whole campaign and to vote for him. So he will be, I think, very, very supportive of the US being energy independent, and that will largely come in the form of oil. So I think there'll be a reduction in that, and then he'll try as well to justify reducing spending on kind of a green transition by saying that it's going to reduce the fiscal deficit, and that's going to be good for the US, and that's good for our future. So it's an interesting thing. Was the Inflation Reduction Act by put in place by Biden, was that the best way to move to a green future? Some would argue, well, maybe not, because it just blew up the fiscal deficit, which didn't really leave room for anything else and left him open to criticism. So the US has a strange and tentative relationship with a green transition anyway. So under Biden, yes, he's put a lot of investment into green energy, but on the other hand, the US is now the world's largest oil producer.
Yeah, but it's an interesting point to be made, though, because it is about this question of energy independence because of what's happened with Russia and Ukraine. And the reality being, and I think we're seeing that a little bit here in the UK now, how do we become energy dependent? Because we cannot be beholden to a country like Russia for our energy, and we have a falling out, energy prices, inflation ensues, and as you're saying there's that impact then on social. What does it do to everyday people? So I think it is an ongoing conversation that needs to be had, is at the forefront of what needs to be had moving forward.
Yeah, I think so. And I think, 4-5 years ago, it was the buzzword, wasn't it?
Yeah.
Everywhere. And now I think it's gone a little bit quiet. And I think that's because it needs to be reevaluated and maybe looked at properly. And not just as a buzzword, but as a reality. Like, how can we know we have to do some of this stuff. How can we do it? The other thing I'd say is that the UK and Europe, they're much further ahead than the US in terms of using renewables, wind power, solar power, for example, things like that. So, we're on just a totally different trajectory to the US. And I think we're going to have to continue to do that, because the other thing is Biden has threatened it, but Trump probably will definitely threaten it, limiting exports of oil. If we see oil prices rise really sharply, if we see another conflict somewhere, that could, if we're still so reliant on them, that's fine for the US. They can continue doing what they need to do in terms of burning all the hydrocarbons they need to. But for us in the UK, where we don't really produce it, we will need to think about being much more renewable focused and doing that regardless of whether the US does or not.
Yeah, interesting point. So we know that from his, fiscal policies, tax cuts, government spending, he's spoken a lot about that, and in his first presidency and term. In a continuation of that, how do you think that will affect the investment climate for, things like inflation, interest rates, and just general economic growth?
I think there's a few things. I mean, if he does come in, he'll inherit a massive fiscal deficit anyway. So there actually isn't a huge amount for him to increase spending. In fact, if anything, he'll want to, the Republicans want to cut. Yeah. So they could cut taxes. I mean, does that really have a huge impact? Not necessarily, because that can actually increase the fiscal deficit. So he could be a bit hampered on that side of things. When it comes to interest rates and inflation, it's a really interesting point with Trump, because he has openly criticized the Federal Reserve plenty of times for hiking interest rates. Yeah. So actually, if you look at what's happened in Turkey and in other countries whereby political leaders try to get involved and say that higher interest rates are bad purely because they're property investors and they don't like higher interest rates for all their mortgages, then you see what's happened in Turkey. Inflation, incredibly high inflation, 80-90%. He will be tempered down in that he can say what he likes, but actually the Federal Reserve will continue doing what they have to do, and they will be mindful just to ignore him. Now, when it comes to changing the Federal Reserve governor, you tend to see them pick somebody in their own party, so it will be who they pick. But even that nominee has to get past all of the Senate, and they have to be, they have to have a blemish-free record, because they will be scrutinised. So I think if it comes to this, I think a big fear about Trump presidency is his interference with the Federal Reserve. But we have to trust in the processes and the systems of the US government to say that actually it's checks and balances, right? So the president can do something, he's got the power of veto for sure, but he cannot just put in place his buddy as the head of the Federal Reserve.
Yeah. I think it's interesting because even in the UK here, and we kind of spoke about monetary policy last time, people feel like the head of the Fed or the governor of the Bank of England and the government are in like cahoots. And it's like they're separate entities, separate jobs. And yes, there may be some level of control, but ultimately the mandate for the Fed is separate and independent to government, to their government.
Absolutely.
So their job is to make sure that, economically everything's on track. They can keep inflation low, they can control interest rates, so on and so forth. I still don't feel as though the general public have confidence that that is actually the case.
I think so, and I think probably in the era of social media and Twitter and X and the blogosphere, there's always going to be, it's going to be very hard to show that to everybody. But you're right, for 30 years now, we've had a independent central bank here in the UK. That wasn't the case before, but it's been independent by and large. It's done well, bar a few slip-ups here and there. And they are independent. Yes, they have mandates and they get challenged and spoken to by governments. They have to testify in front of them to justify their position, but they are independent. What we don't want is any country coming in and threatening that, because we've seen around, I've used Turkey as an example before, you put in your son-in-law or whatever else in the head of the central bank position, it just doesn't work.
Yeah, absolutely. So in the event of a Trump victory, the end of this year, what could investors do to kind of mitigate volatility and try and take advantage of the potential market conditions that will arise as a result of it?
Yeah, so it's interesting because it's not given that it will cause any volatility, especially if the economy is trundling along as it's doing now in the US, where it's very strong and it's stable, unemployment is low. It could continue just moving along and doing things like it should do, like reacting to corporate profit results and things like that. If you've got US stocks or indices in your investment plans, for example, I wouldn't necessarily move it around. Wait for the dust to settle. Firstly, there's the election in November. They don't actually take power until January. So remember that. They're not really in their setting policy until a few months down the line. So there's a lot of time to take stock, listen to what they have to say, and then make any adjustments if you feel they're necessary, but you may not. Because, Donald Trump is probably sitting there going, oh, I'm leading in the polls, this is excellent, because Biden has laid a really great groundwork for him. Strong economy, low unemployment. What more could you want when you come into power? Yeah. He would be mad to change that. Yeah. And it's those conditions that have helped the US stock markets to reach record highs and for that broadening out of the rally, which is important, as we've spoken about before. And I think he'll be mad. All talk, Donald Trump. So don't trade based on what he says. Never trust a billionaire.
Yeah. I also think that, again, it comes back to the fundamentals of this. If you're investing for the long term and you've got a horizon where you're looking to generate that wealth over the next 10 to 15 years, this is just a moment in time. It shouldn't really have a huge impact on really what you're doing. What will happen, because we can't control the outcome of that. He might not win. He could win. It might just be business as usual. There are a whole host of other factors that might come into play that we have no influence on. So ideally, if you've packaged and you put your investment portfolio together with that long-term view and you're happy with the way things are currently within your portfolio, there isn't really much to do per se, because it's an event.
Yeah, this is it. And I mean, look, does it mean that if he gets in power again, that the US is moving more towards, some Russia style? No, because he can only stay in for another 4 years and then he will be gone. It will take, if something changes in that, in how America governs itself, in the American Constitution, then worry and then get out of US stocks. But we do not see that happening. So exactly, it's 4 years and then he will be gone. He will be part of history. A strange part of history, but a part of history.
It would definitely be a strange part of history, yes. Especially if he gets elected again. But we see stranger things happen.
We have.
Thank you so much for this, Kathleen.
Thanks, Peter.
If you've been watching this is interesting, this is actually quite a fascinating topic. And when we had the opportunity to think about what kind of topics we wanted to cover, I was like, we have to talk about this. Time will tell what the outcome is going to be, whether he wins or not. I mean, people will say that he's got a lot of momentum. I can't believe he got a straight shot to the nominee, but it's a strange world that we live in. And whether you love the man or not, what happens in the next few months is anyone's guess. I think importantly though, if you are an investor and you listen to the podcast, you listen to what I talk about here, it is that long-term view really ultimately that we're looking at here. And this will just be something that happens during the course of your long-term investment career. And do you need to do anything specifically? Perhaps, maybe you do, maybe you don't. But at the end of the day, it's all about understanding kind of how the land lies against your goals, your priorities, your timeline. That's really what matters here. In the collaboration here with XTB, we've got investing plans, which again is there to help you build a portfolio, ETFs, of funds, of engines that can help you create wealth over the long term in line with your goals and your aspirations and your timeline. I'm going to leave a link to find out a little bit more information on the description and the show notes, so go check that out. Next, we're going to be jumping into something that is very, very important if you're an investor. It's probably one of the biggest things that I struggle with, and I've been doing this a long time and I've been advising people for a long time. We spend a lot of time talking about this, investor psychology. So I'll see you in the next episode.